Hello, traders. Welcome to the live stream, a Monday live stream. A little bit different to what we usually do, usually on a Tuesday and a Thursday, but one-off Monday special today. I hope everybody is doing really well. My name is John Kibbler, Senior Market Analyst here at 𝖢𝖥𝖣yi. I'm here to take you through the markets. I'm here to take you through what news is coming up for the week ahead. I'm going to take you through a couple of opportunities that I'm looking at in the markets and the reason behind those. So welcome to the live stream. If you are new, if you're not new, say hello, give me a wave, let me know the regulars are in watching at the moment. I hope everybody had a great weekend as well. Let me know what you got up to. But I've got some really interesting analysis to go over. Finally starting to see a little more development in terms of commitment to trader reports. So there's a couple of opportunities that I'm eyeing up at the moment due to those commitment to trader reports. A couple of seasonal plays that I quite like as well that we're going to take a look at. Obviously, this is a great opportunity to go through the currency strength meter as well as the heat map. So we're going to go over the Forex heat map as well, which helps me kind of spot which markets to go and focus on for the week ahead as well. So let's dive into it. Let's get on the screens and let's get on the charts. Let's get onto the stuff that we want to see. Look at these euro futures at the moment starting to drive up a little bit. If we just go take a look at euro US dollar, we can see we're up over 1% today alone. This is something that we've been looking for. Okay, this is something that I've been looking for in particular because of the commitment of trader reports. But before I get into the fun stuff, let's get the boring stuff out of the way. Now, it's not boring to me, but it might be boring to you guys because I know that live trading on YouTube or live analysis on YouTube, you want to see some levels and stuff. But gotta check out what's going on in the Forex economic calendar first. Interestingly enough, at 3 p.m. today, or sorry, tomorrow, we have the CB consumer confidence. This is going to be a big one if you're looking to trade the likes of the US equities, or maybe even looking at the performance of the US dollar recently. I quite like the idea. I've been on the short side of the US dollar at the moment, but still waiting for confirmations and things like that. So if we were to see some kind of jump in the consumer confidence, but maybe some bearishness on the US dollar, then that would be something to check out. But we do also have FOMC meeting minutes on the Tuesday, and then we have a big day on Wednesday. And two currencies that are a little bit in focus for me at the moment: Australian dollar. We talked about a pound Aussie short last week. We'll go check out what that market's been doing. New Zealand dollar as well. This is the one that I'm really focusing in on this week. The RBNZ forecast to cut rates by 50 basis points. So really interested in this one in particular. I've actually just filmed a video on this, diving into this potential move as well. So I'll talk about this in a little bit. Core PC price index, the preferred measure of inflation for the Federal Reserve, expected to remain the same at 0.3%. Any upside here would be quite interesting to see, as the odds of a December rate cut starting to slim down a little bit. CPI out of Germany as well, RBA speak as well, but also interesting towards the end of the week, which we'll touch upon in the live stream on Thursday. Tokyo core CPI, as well as some other stuff, including a bit of China data. Actually, we'll just scroll down the page. Some China manufacturing PMI as well. So good afternoon to you, Vincent, and good evening to you, Eddie. I hope you are both doing well. Thank you for jumping in. Let's go through some. Let's not stick around today. Let's not go through and talk about what's going on. It's a Monday. Usually when I come to the live stream on Tuesday, there's already been some stuff happening, so we go and cover that. Not really had that this time. We've had a bit of retail sales in New Zealand, which was a lot better than expected, which is great. Kind of leads me into what I'm going to be talking about today. So first things first, we're going to take a look at the COT reports. Okay, we're going to have a look at what's going on there and the signals from that. Second, we'll have a touch upon a couple of seasonals, and 3, we're going to take a look at the currency strength meter. Okay, so let's dive into the COT reports first. Okay, I might actually change the view of this so you can see this a little bit better. How does that work? I've just realized my name on this is Jonna. It's not Jonna. Let me, sorry, playing around with buttons there. Let me delete that. There we go. That works better. And yeah, we'll go with this view. Shrunk down into the corner, but I wanted to try and maximize the chart a little bit more. So let's kick it off. We're going to come round back to the Canadian dollar and the euro, but I've kind of touched upon these a couple of weeks ago, or at least last week. So a kind of a fresh one to look at going into this trading week is the New Zealand dollar. So quick synopsis of the commitment of trader reports. If you're not familiar, let me know in the chat. Are you familiar with COT reports or not? Because it'll depend on how deep I go into the COT reports for you and how you use them. But I'll go over it anyway, just to give you a quick synopsis. You've basically got 3 reporters to the Futures Commission. And basically, if you are trading at a significant size, you have to declare it to the Chicago Board of Exchange or the CFTC. So we can basically track what businesses are doing within the markets, what commercial, so that's commercials. Non-commercials are your hedge funds. We can track what hedge funds are doing because they have to declare what they're doing. And then we have the non-reportables, and that's like small speculators. Okay. So essentially we want to try and follow what the hedge funds are doing, but there's a really unique way of using the COT reports, and that is looking for reversals in the markets. So I am looking at the moment at a New Zealand dollar one. Okay, so let me just explain this. I'm actually going to give you a quick example first, just to kind of give you an idea of how this works. Okay, so I'm actually going to go on the Swiss franc futures, and I'm going to scroll all the way back to January 2015, okay, where we saw this astronomical rise in Swiss futures. So you might be familiar and were trading around this time. This was when basically the Swiss franc depegged from the euro, and we saw this huge move up, right? Now, was that move predictable? Potentially, okay. Why was it a potentially predictable move? Because of how the sentiment was being positioned within the market. Okay, so what I mean by that is, if we have a look at what was going on in terms of hedge fund and commercial sentiment at the time, so in particular at the low, you'll see that commercials or businesses were aggressively long the Swiss franc. Okay, so they do the opposite of what price is doing essentially. Hedge funds were aggressively short. Now, if we kind of look left, they were at levels that we hadn't seen for a good while, okay, which coincides with, if I just turn my cursor back on, which coincides with this low, okay, in the market here, where you can see price after the fact rallied to the upside, right? Same with the commercials. They were at highs that we hadn't seen to those extremes, okay? So you could see they were over leveraged essentially at that point. That's what I'm looking at in terms of were the hedge funds over leveraged at that point. And they were over leveraged to the downside. Okay. And you can see what happened with price. Now, that's a rare move. That is a very rare move, right? We don't usually see a move like that. We usually see a move like this, like a gradual trend coming from the move, or at least a pullback to where the market goes a little bit neutral in terms of contracts, right? But this was a very rare scenario where we had this huge snapback. But if you were familiar with current trade reports, you would have already been looking for this Swiss long play because of where the contracts were positioned. Okay. Hi, just nothing. Maybe doing well. Vincent, COT report and seasonal for yen and Swiss franc. Yeah, we'll go take a look at those. But that's in a nutshell what I'm looking for. Okay, and there's been lots of examples this year where it's happened. We talked about CAD this year as well, silver at the start of the year. So yeah, we'll have a little look at those at another point in time. I might try and do a video just deep diving on COT reports. But essentially, look what we've got here from New Zealand, right? We've got commercials at significant highs, or even surpassing those significant highs. So the last time commercials were in and around this area of buying in terms of long contracts, we were here on the New Zealand chart. So this is a weekly chart of New Zealand futures or New Zealand US dollar. Okay, you can see that we actually had a bit of a bearish week, but it closed higher and then it rallied back up into the range highs, because you can see at the moment price pretty much in this kind of trading range here. If the highlighter tool wants to work, doesn't want to work. Pen tool. Okay, yeah, so here's your range on New Zealand US dollar. Okay, we've come up into the highs of the range, or sorry, the lows of the range. At that point we had commercials aggressively long, hedge funds aggressively short, market reverses to the upside. Now we've got a very similar position. If we look left, we're surpassed those highs and we're at these types of highs here, okay, which were these lows in here. Market rallies to the upside. So I'm very interested in a potential opportunity on the New Zealand US dollar at the moment, and I'm also interested in potentially buying Kiwi against weak currencies. Okay, so that's how I'm going to try and gauge this little bit of a move in here. So we're at these range lows. We've got extremes forming on the COT reports. All I need to wait for now is some kind of technical kind of setup. Hi CG, hope you're doing well. So this is what I'm looking for now. Now if I just bring in the New Zealand US dollar chart, we'll come back to euro in a bit. Up 4% on the day, up 0.4% on the day, sorry. Let's remove all the drawings here. Pop up to that weekly chart just so you can see it's the same chart that we're talking about there, but you can see pretty much in this range low. These are the kind of the range highs up here. Okay, so the market has been trading between these levels since the end of 2023. Arguably you could go a little bit further back and look at the sort of beginning of the range, sort of mid to early of 2023 as well, but I think it's proper solidified here between these 2 points. So we're back in this level now. We're back at this level now. So I'm very interested in looking at reversal patterns in at this point. So what does that mean when I say reversal patterns? Well, I'm basically looking for a change of trend, right? So if I go to the daily chart first, what would that look like? Well, you can already see there's something starting to build here, because we've got a lower low on price, but we're starting to get a higher low on our stochastic. So there's potential divergence forming here, right? That's a really poor D. So there's potential bullish divergence forming here, where you have the stochastic oscillator pointing upwards, potentially creating a higher low, whereas you've got price potentially making a lower low here. Okay, well, we have technically made a new low, that price there. So this is something that I really like to see. I like to see a little bit of divergence at that key support point. We can also add a little bit more technical analysis to it, right? You know, if we just have a quick look, what can we add? Well, we can add potentially trend line resistance coming through here, okay, with our formation point here, anchor point here, market coming up to potentially test that area. So what you could also look for is a break of this trend line and a continuation to push to the upside. Another one I'm looking for is, obviously we can go a little bit lower. Okay, if you want to be a little bit more aggressive with how you want to make a move on this, this is just my opinion. Obviously, this is what I'll be doing. But if we get a bit of consolidation and a breakout, I like the idea of looking for these moves. So at the moment, we're trending down. Okay, I need these conditions to change. So I'm looking for price to potentially break through these highs here, maybe even break a number of these highs to really cement that there's a possible idea that this market could start trending back to the upside. Now, ideally, if I was looking for, you know, a very good move, what I'd be looking for first is the stochastic to start pointing back to the upside. And then I'd be looking at my hourly chart with the crossover of the averages. You know, if we've got a crossover of the 50 and the 200, price doing something like this, and then I'd be looking at these pullback areas for buying opportunities. Okay, that's what I'm personally going to be looking for. But there's multiple ways you can look at this market, but this is one that I'm definitely on my radar now. It's on my watch list because of where the contracts are in terms of the commitment of traders. Now we can take a look at seasonals on New Zealand as well. I don't know where they are at the minute, but let's just have a quick look at where the seasonals are. Okay, so if we take a look at an election year, okay, the election year seasonal, we have a 72% correlation with this year's price and an election year, typical election year, okay? And if we look at this, there's usually a long signal that forms on the 21st of November, okay, and lasts to the 6th of December, all right? It has an 83% win rate, but there's only been 6 trades, okay? So there's not a lot of data to go off there, but it's had 5 winners, 1 loser. And if we look at history, annualized return over those years, 61%, average return 2.8%. So what that means is if I come to the chart and if I just put this marker box on here, okay, so if I go to 2.8% here, right? On average, the move that we get when we get this type of seasonal play is 2.8%, right? So at minimum, we're looking at a potential move of over 150 pips to the upside, okay? So if I pop in the average, and we're just going to round it down because we want to be cautious, right? And we're above a psychological level. So 0.6 could be a very short-term target for us, okay? And if price does breach through that and continue to trade higher, then there's a potential for a reversal because we've got the stronger backing with this one with the commitment of trader report move, okay? Hi, Bongo. Hope you're doing well. So this is what I'm looking for. Now, the beauty of this is that we can add something further in, right? And what I'm going to add in is strength and weakness, okay? So what I like to do is when I get one of these potential opportunities in the market, I like to then try and say, how can I maximize or make this more efficient for me? Now, we know that the US dollar is a stronger currency. I'm not saying that the dollar isn't going to start selling off, but should we go and maybe look at a currency that's not performing very well, i.e. the euro, although I don't like the idea of being a seller of euro right now. The euro is a weaker currency. Pound, okay, which I really like the idea of being short on. So pound to me is possibly the one to look for, potentially the Swiss franc, okay, because it's at -3, hasn't really gone anywhere right now, but I know Vincent's talking about potential Swiss franc move, and I know the move that Vincent's looking at the moment. So let me just do a couple of different things. Let's have a look first at the Swiss franc, okay, because it probably will have a very similar pattern. Yeah, you can see the seasonal play here, very similar pattern. Election year has a 90% correlation. Take a look at the election year as well. In an election year which it has a 90% correlation with, doesn't really have the move. If we look at a 20-year average, then yes, there is typically a little bit of a low that forms in November, and we see a move up. But if we look at how 2024 has been performing with the past 20 years, it's only got a 56% correlation, so not as strong. And with the election that we just had a little look at, we don't typically see that much of a bounce until middle of December, middle of December. So for me at the moment, I quite like the idea of potentially looking at the New Zealand dollar against the pound. Okay, so let's go take a look at pound. Now, we did obviously talk about pound Aussie last week, and the price was just pulling back last week when we were doing the live stream, which was Tuesday. Okay, so on the live stream, it was around here. The price was in and around this resistance level, and we were talking about the potential for this market to move lower because of the differences in economic policies. Market has continued to sell, but we're in the range lows now. Looking at pound Kiwi, it's not looking great, is it? If I looked at this market and said, do I want to be short? Well, from a fundamental perspective and potentially the commitment of trader report perspective, yes, currency weakness, I want to be short. But we have to go to the next part of the system, right? So we've got the why. Okay, why do I want to be involved? Well, pound on the currency strength meter is weak. Okay, is a weaker currency and getting weaker. New Zealand dollar has a COT signal long. So I want to go look at this currency to potentially go short. Do the conditions match the bias of the why? Okay, now looking at this, just eyeballing it right now, I wouldn't say so. Okay, because you've got the market that's made higher highs and higher lows, and we're in this kind of almost like a flag pattern being built after this extension leg up, which is not, it's not completely like, this is bullish, it's going to move higher. But yeah, I don't like this price action here. This wouldn't be what I'd be looking for. I would have liked to have looked for price to do this, right? Starting to trend to the downside. We don't, although we have that here, okay, it's not a strong downward trend. So at the moment, this is probably not setting up the way I would like it to essentially set up, but I don't think I'd want to be bullish here either. Maybe we could look at a bit of a reversal in and around the 215s. But that's not the strongest case. Let's have a little look at the other case then. So New Zealand Swiss franc. Let's have a little look at where this is at the moment. So this is looking a bit bearish from a weekly perspective, I must admit. This market has been down for a good while now. Daily chart is just a little bit of a mess, isn't it? Consolidation. Conditions aren't really here at the moment to say I want to be a buyer. So still have to wait here a little bit, I think. If we had a close above this high, that would be a nice little move. If I actually think about, we were discussing the potential long on CAD. And if we look at CAD Swiss, this has started to kind of break out of these lows, starting to make it move higher, So I quite like the idea of CAD Swiss is in sort of the position that I would want Kiwi Swiss to be in, where the price has been making these higher highs and higher lows, just coming into now an area of sort of demand here where the market could potentially start pushing back to the upside. But I think if we want to try and take advantage of Kiwi at the moment, it's more likely going to be on this side of things, on the New Zealand dollar side of it. I'm looking to see, can we get a breakout? Can we get a move up to 0.6 in line with the seasonal? And then does it continue in line with the COT reports? Just nothing. How might gold perform this week considering the current market sentiment and the COT report? Let's have a look. Did everybody make sense of that New Zealand play? Hopefully you did. Let's have a little look at what gold's doing. I don't think we're in too much of a position right now with gold. No, I quite like the idea. Let's have a quick look at gold. I quite like the idea of a gold move higher potentially. Now this is down. S&P 500 at the moment has gapped up and is starting to push higher, which is interesting to see. This is down 2.76% today. Silver down 3.23%. You know, we've been very bearish silver. Platinum as well, 1.5% down. Gold, on the other hand, traded back above this area of demand around the 2600. So let's have a little look at gold, because looking at the COT reports, there's actually a potential long coming from the commercials side of it. Let me just break this down a little bit. Let's keep the net on. So we're starting to see hedge fund sentiment change on gold, right? Starting to see this now, which means that hedge funds are starting to get short. Okay, hedge funds are starting to get short on gold. They're no longer in that sort of buying phase, right? And this was something that we spoke about in terms of they were, again, over leveraged to the upside, in my opinion. But as they're buying, you can see they're following the trend. The price is moving higher. Came into that sort of $2,750 area, we started to see a bit of a pullback. They've started to sell some of their positions now. You can see that the commercials are starting to get long as well. So to me, it's showing me that there's probably is a little bit more downside to be had when I'm looking at COT sentiment, because hedge funds are starting to get short on a net positioning. Let's have a little look how they're breaking that down, because what you'd want to see really if they were going to aggressively get short is you'd want to see the short contracts increase. But they've not already done that, have they? If you look at the short contracts down here, they're fairly neutral. If you look at the long contracts, they've just decreased their long positioning. Okay, so that's why we were talking about that they were over leveraged, because their long positions in the market were at extremes, and that's what's, you know, they've basically took profits up here. This market has moved back. Looking at the overall trend of the market, it's still up. If we have a look at the seasonals for gold as well, usually this time of year performs pretty well. Okay, so we've got 57% all years, 12% to 20 years. Let me just hit calculate on here. So over a sort of number of years here, okay, of the custom years, we have a 79% correlation with years that have performed similar, right? So we should have a strong correlation. Typically in that sense, towards the sort of end of November 19th can usually be a low in the price of gold, and typically we see a continuation of that bullish move. So from a seasonal perspective, I quite like the idea of moving higher. Looking at the sentiment, like on the current and the trader reports, we are starting to see them kind of take off the longs, but they're not getting short, right? They're not really getting short. What I would like to see is very similar to what happened here. Okay, you can see that the long contracts, they start to decrease, but look at the short contracts, they also match those and they start getting short, the hedge funds. Yes, they've risen a little bit, but on average, if you kind of look back, it's not really broken into any kind of new highs there. So I don't think this is necessarily hedge funds getting short. I think it's just they're taking profits on that wild run that we've had in gold, and they're probably going to look to reposition into the move for now. Not quite got the extreme that you'd want to really see in order to look for a complete reversal. You know, it wasn't like platinum had a massive reversal signal on. So yeah, the sentiment on gold for me is still pointing a little bit more to the upside right now. And if we look at price, yes, we broke through this channel. We came back, pretty much retested this zone of support. If you actually go and take a look at it on the futures market, it actually came and tested this consolidation area in here. Market has driven up to the upside. So yes, we're a little bit of resistance, but also we've kind of climbed back above this area here. So I'm going to see how price reacts. I think if we get a little bit of like bullish price action coming in here, I'd expect a bit more potential upside from gold. Okay, so you can see this kind of consolidation in there. If we do get a little bit of a move into this, maybe a little bit of a consolidation breakout, you know, that could be fairly bullish in my opinion. So we shall see. We shall see. Right, let's go on to the next one then. So the next one for me is, so we've gone through Kiwi, okay. The next one is Euro. Euro also has a significant sort of cut signal, okay. So if we take off the contracts here, okay, what's been going on? Commercials have been getting aggressively long, okay. They also got aggressively long here, but you can see that we didn't have the turn, right? Market continued to sell off. That was pre-election as well, by the way. So I wouldn't necessarily look at a cut signal pre-election, especially the week before. And then the market has continued to sell off with the momentum of obviously the US presidential conclusion, right? So we're starting to see this move down. Looking at the hedge funds though, they're still aggressively short, and they're approaching some pretty big levels. You know, if we look at where price reversed in the past, right? Let me just have a little look at this sort of zone in here. We're in a very similar level than it was at the back of 2022, right? Which was this period here, okay? So you can still see for a number of weeks, price continued to trend lower before we actually had the turn in Euro futures. So that's just something to bear in mind. But, you know, if you kind of apply a little bit of technical on there, you can see that we had this kind of downward channel. Price broke out of the channel and we saw the move and the acceleration to the upside there. We're in a very similar position now, and I want to start looking for potential opportunities on this side of it. Now, doesn't mean it's going to happen this week, doesn't mean it's going to happen next week, but I just want to be aware that if I'm selling Euro, there's a hefty cut signal for a buy. So I don't necessarily want to be selling Euro anymore. I want to be looking to see if there's an opportunity around this. Now, looking at the daily chart on Euro US dollar, you can see we tried to reach these lows here back in October. We did breach them, but look at the move and the turnaround that has been in the market from Friday to now, right? We've had a 1.8% move to the upside, okay? So looking at this, what can we kind of pick out from this? Well, you know, looking at the trend to the downside, market is trending lower. Can we look for an opportunity where price moves higher, comes back in, and then maybe looks for a continuation to the upside, some kind of reversal pattern going in around towards this 1.05 handle? So that's what I'm looking for here on Euro. Like the opportunity that we're starting to sort of present ourselves with. Again, can you look at Euro against a weaker currency? One of the markets we did talk about last week was potentially Euro pound long. Look what's happening in this market now. The market is rallied, come back into the lows here, found support at this point. I'm starting to like what's going on here on Euro pound. We talked about this last week in terms of a potential opportunity. I haven't taken anything here, but again, starting to just simmer a little bit, and I quite like the opportunity that's potentially forming here on Euro pound. Okay, so big level of support as well. So again, can we try and take advantage of the euro against currencies that are a little bit weaker? Potentially euro pound. Euro Swiss is at a very interesting position, coming right back down into this area here, okay, towards that 0.93, which I actually liked for a short down to these areas, but it happened so quickly. Didn't even get a chance to even look at it. This to me, I feels like a good opportunity as well. You know, look at 93s, market rebounded from here. Again, look at that candle. Very aggressive wick to the upside, closing it up to the upper end of the candle there. That to me I quite like. A little look at the 4-hour chart right now. Market has rallied, starting to consolidate. If you get a breakout there, that to me I quite like, in my opinion. So Euro Swiss is looking pretty good as well. So Euro Pound, Euro Swiss, I quite like the look of. Euro US dollar as well. Just waiting to see if we get some decent setup on those. Any questions so far, guys? Is that making sense? Is that new to you? Let's have a little look at the currency strength meter then, and have a look at how this is shaping up this week. Let me just put this to 90. So one thing that I want to point out is the fact that the US dollar has been the strongest currency for a number of weeks. So what is that? 1, 2, 3, 4, 5, 6 weeks in a row. It's been the strongest currency. Now, this has obviously happened in the past. If we look at what happened with the Japanese yen for a period, it was the stronger currency for a good while before it started to give back those gains. Very similar to what I think is happening here at the moment. Market is very one-sided, US dollar. So I'm looking to see if there's any kind of vulnerabilities there. Now, when I'm looking for reversals as well, I like to see a currency at the opposite side, and the euro is on the opposite side. So I might just be putting coincidences together, but in my opinion, there's a really good potential setup here, because you've got euro COT longs, right? Okay, so euro cot longs. If we actually go take a look at the euro on a seasonal pattern as well, euro seasonal is actually bullish as well, which I'll go take through in a second. But then when we look at the strength meter, okay, currency strength meter, we can see that euro is in a reversal zone, okay, reversal, and so is the US dollar, okay. So all these kind of things are just kind of pointing to me that there could be a potential snapback on euro dollar, and I think because the market is going to be looking to over leverage into this euro move. Yes, if you look at the kind of fundamental picture of Europe at the moment, it's not great, right? German PMI is coming down, not very good. ECB are cutting rates aggressively to try and help the German economy. Political unrest in Germany as well. And then you've got the situation between Russia and Ukraine and NATO. So there's lots of factors going against the euro and growth at the moment. So what that does though is it puts hedge funds and speculators in a position where they just sell it and they get aggressive and they build into a position, and this is what can happen. They can get over leveraged to one side and they can get taken from the other side. So that's what I'm looking for really when it comes to euro at the moment. Looking at other currencies then that are on this. So CAD has been performing pretty well. You know, I like the idea of being a buyer of the Canadian dollar. We've talked about this. Again, last week we were liking the pound CAD move to the downside, which you can see came through pretty nicely. What else was it? EuroCAD as well, actually, we liked to the downside. This market moved pretty nicely as well. Look at Tuesday's close, bearish Tuesday close, and then for the rest of the week, it just continued to trade lower. So this was also a market that I liked a lot for a continuation to the downside. So we'll see if these markets can have a little bit of a pullback now, because EuroCAD I'm not a fan of right now. I liked it when we broke out here and we continued to trade lower, great. But now I've started to see the situation on the euro. Just makes me a little bit of being a bit cautious on selling that euro at the moment. Pound yen did pretty well last week as well. This is another market that I quite like to move to the downside on, very much because of the growth situation in the UK. If we just quickly flick back to pound yen, the yen also getting stronger, okay, which you can see here. Had a little bit of a dip last week, but all in all getting stronger. The orange is pound, and you can see that pound has just continued to fall off. So for me, pound yen still is a market that makes sense right now. From a technical perspective, it had a consolidation period at resistance. It broke out, it retested that resistance. We're starting to see a little bit of a move lower there. So I quite like this until we reach sort of the 191s, or at least the 190 spot 50 handle. In and around these lows, I feel would be a good area to look for price to kind of rebound slightly in that sense. So pound yen I quite like as well, with a bit of a continuation. I mean, looking at the 4-hour chart at the moment, lower lows, lower highs, hourly chart, you know, market's trying to sort of make its way a little bit. It's finding a little bit of support down towards this low, but you know, we've broken out of a sort of consolidation hold there, so the market might want to continue to trade lower. But I don't usually fill out my currency heat map until sort of Monday. So you know, what I'll be looking at this evening is I'll be looking at how obviously last week's close came about, what the relationship is to the 50 moving average, what the momentum is, stochastic, and what trend it's in. I mean, we can try and do a couple of these now if you're interested. So let's have a little look at euro. Okay, let's have a look at euro US dollar, because I've put reversal potentially here. Okay, I need to change a few of these around because I took Aussie out of the mix. Got neutral on Aussie. So what do we have here? Euro US dollar, potential reversal setup. Pound yen still bearish. Okay, so let's just do pound yen as our example then. So what I typically do is I'll have a look at how pound yen has closed on the week. Okay, so I can see that it's closed bearish. All right, so I will flick back to here and I'll just simply do a traffic light system. So close bearish, so it's red. Now the 50 daily moving average, it's really simple. All I look at is on the daily chart, has price closed above or below the 50 daily moving average, and it's closed below it. Okay, so if I'm looking to be a seller, you know, I like the idea of price being below its 50 daily moving average. Now when it comes to momentum, what I mean by that is price going away from the average, or is price coming back to the average? Now looking at the move here, so if we look at Friday's close, it was closed lower, so it's closing away from the moving average. Okay, so that's another bearish highlight to me. The stochastic oscillator, is that bearish? Yes. Well, I can see that the K is below D. We're moving towards the oversold section, but ultimately it's down, pointing down. Okay, so I would note that as red as well. And then I look at daily trend and phase. Okay, so this is, you've got your primary phase, secondary phase, primary phase in the market. This is important because it's how I will then look to enter into the market. Okay, so what happened here is the market consolidated. Okay, so essentially no trend. Okay, but then this happened and we broke through and we formed a new low. Okay, then we formed a lower high. Okay, and price as of Friday formed a new low. So in my opinion, this could have been now classed as the primary phase. This could be classed as the secondary phase. This could be classed as the primary phase. So what I would do in that scenario now is go and take a look at this again and say, okay, well, the daily trend is bearish and the phase that we're in is P1. So that is also bearish. So what I'll do is I'll give this a traffic light and say, yes, this is good to go. All I need to do now is wait for Monday's close, really, and then look at any kind of opportunities around that. So, let's say tomorrow closes bearish and we get, a move higher and then a breakout of some kind, right? Then I'll be happy to look for opportunities to the downside in line with the sort of momentum there. So that's how I kind of do it on a week by week basis, but I don't usually do this until sort of Monday evening. I like to see how Monday is closed, because that can also give me an insight as to what's happening in the market. So yeah, what time are we on? 48.50 at the moment. Everyone's very quiet today. Hello everybody. Let me know if you're enjoying the content at the moment or you're enjoying what you're seeing. Hopefully you're all quiet because maybe you're taking a few notes or something. But yeah, let me know your thoughts on what I'm looking at going into this week. Maybe you share similar thoughts, maybe you don't. But yeah, let's have a quick look at a couple of other seasonals then. Let's have a little look at the majors because we are coming up to the end of November. We don't typically see anything there. Let's have a look at the start of December. So start of December, we usually get a bit of a move on CAD as well. Let's have a look at an election. So we have quite a correlation in kind of CAD at the moment. 70 over all years, 69% over 20, but 92% correlation with an election year. Typically we can see a little bit of a bottom coming in around this time of year as well. And I quite like the idea of buying CAD, which would be dollar CAD to the downside. But again, I'm just kind of waiting for some kind of setup here at the moment. I don't want to get short just yet. Although what was interesting to me was that last week price basically came back and tried to recover the previous week's move where we had this big move out of it. But we do have a bullish cut signal on CAD. So I'm keeping an eye on this for a potential move lower to the downside. No worries, enjoying the show. Thank you very much. If you can leave the stream a like as we go, guys, I'd really appreciate that. If you've been enjoying what you're seeing, if this is something that's new, I know this might not be your typical. I've been doing this for a while now, not just trading the markets, but live streaming, and this is probably not what you typically get with other live streamers, because other live streamers are probably live trading, looking at sort of really short movements within the markets. This can work in that sense. It can work for short movements in the markets, but you just got to be very understanding of your higher time frame comes first, and then you can go look at your lower time frame stuff. Because if you had a cut play here, for instance, like we did back on dollar CAD at 139 where we got short, I just took a 4-hour swing trade, which was basically off the back of this close here, right? And then the market just continued to roll over. But if you knew on a day-to-day basis that you wanted to be short this market, you could just highlight some supply zones, look for price to come into those zones, and then look for a continuation or look for some kind of patterns We did go sideways for a period before breaking out again and moving down. So yeah, you have to also be aware that there is going to be potential chop in the markets before you kind of continue to try and trade those moves. This is a potential for the future though. But I prefer to kind of swing trade these types of moves. Right, guy. Good morning. I keep getting to these streams late. That's no worries. It's you can watch it again. That's the beauty of these streams on YouTube. You can watch it again from the beginning. But basically, just in summary, for those that have joined, we've gone over the commitment of trader report opportunities this week, mainly being euro, okay, CAD, and the New Zealand dollar. We kind of broke the New Zealand dollar down in depth. I have got a video prepared for tomorrow for the New Zealand dollar, so you can check that out when that comes out. We also kind of had a little look at the situation with gold and the potential move in that market. What else did we look at? Seasonals. We took a look at seasonals on the Canadian dollar, seasonals on gold, Swiss franc, as well as the New Zealand dollar as well. And we also took a look at euro. Actually, I don't think we actually looked at euros in the end, but this is kind of adding to my analysis of the potential reversal on euro as well. We've got a seasonal play here that typically happens on the 22nd of November to the 11th of December. Has a 70% win rate out of the last 20 years. That is, it has 14 winning years and 6 losing years with an average return of 1%. Now, when I say 1%, that is in price movement, not sort of 1% as in risk reward ratio. Max profit has been 6.5% in those years, though. Yen, sorry, yes, let's talk about the yen. I forgot to have a little look at your seasonals on yen. I know you wanted to have a little look at those. We have a fairly strong correlation with 20 years of data, where we can see a little bit more bullishness out of yen, typically towards the end of the year. The yen market's a very interesting one, isn't it? Because I would have looked at the potential for a continuation of yen strength. I mean, I do like it. Obviously, I've talked about pound yen, which I like, but we've not really seen a big influx of yen strength. Now, we did see a little bit last week, but that was because of the risk of Russia nuking everybody. But that's very unlikely to happen. I'm not saying it's never going to happen, because you never know, but it's highly unlikely that it will happen. And that caused a little bit of uncertainty, but that kind of faded a little bit. The BOJ aren't doing too much right now. I know that one of the finance ministers came out again and said that they will intervene again if they feel that they need to. And dollar yen was approaching some very interesting levels again. So I like the yen, but I'm not like in it as much as other currencies at the moment. I think there's better currencies to go and look at. I can see why you're looking at it, but I think like when I look at it and go, okay, look at yen, but look at euro. Euro has a very defined seasonal pattern, and we've got very strong correlations throughout the entire year compared to 25 years of data, 20 years of data, and even election year data. So I'd much rather go and focus on euro than yen, but I can see why you're looking at it, Vincent. I can see why. Ibrahim, New Zealand COT reports show extremes. Yeah, perfect. This is exactly what we kind of went through earlier. We had a little touch upon the New Zealand dollar, and we've got an extreme from the hedge funds and an extreme from the commercials. So this is definitely one to keep on your watch list. However, a rate cut is coming up. That's why I'm afraid to buy it. Yeah, Well, this is why you need to then you kind of need to put technicals and stuff with it as well. What'd be interesting to me is if we, and I've explained this in the video, if we get the rate cut, which is typically bearish for a currency, right? If we get the rate cut but price closes higher on the day, that could be a sign that potentially the sentiment is starting to change. But yeah, I would just add some more. I'll just add some technicals in like we did earlier. We talked about Kiwi. Market is at support. You know, do I want to be a seller? No. Do I want to be a buyer? Not yet. Okay, so it's about trying to find that balance of what we need to see in order to be a buyer. Maybe we need to see sort of a failure at the top of the highs there, maybe a consolidation a couple of days, and then a breakout or something, you know. But we need to see the chart match up with the bias. At the moment, it's not doing that, so we can't do anything just yet. You know, we're just sitting and waiting, being patient. But thank you for your contribution. Right, guys, we've been running for about 58 minutes, so I usually run these for about an hour, so I'm going to leave it there. Thank you to everybody that did comment and sat back and watched, and I hope everybody did enjoy it, and I hope everyone took some kind of piece of information away from it. That's the goal of these. I've set up another stream for Thursday, so I'll be back on Thursday. Hope everybody has a successful trading week. Until then, remember, keep your risk low. Don't over leverage yourselves. Think smart. You're in this for the long run. So thanks for watching. Appreciate you guys, and I will catch you on Thursday. Cheers.